Hey there, YouTube. Welcome back. We're going to get right into the stock market charts, look at what's going on today. And what I'm seeing is deterioration of the internals within the market. Today's another light day. The last 3 days, really, the volume has just completely dried up. And the day's not over, but I'll cover that, and we'll cover this deterioration of the internals. So what I want to point out, all right, so the triple Qs. This is the tech sector with Amazon, and you can see here, we're up marginally higher, nothing crazy, just continuing to run up. Here's your uptrend right here. Just there's nothing that the chart's telling me today on this. If you look at the daily though, really low volume. We've been declining in volume the last few days, and I think today, unless there's some sort of big move or big announcement, will be another low day. Now, they could come out with some sort of a stimulus deal news announcement. The market might pump on that. The market might sell off on that. We don't know. I mean, probably you would get at least an initial reaction of a higher move, and then maybe once the algos are able to figure out what's in the package, then maybe they'll sell off. I don't know. But, obviously probability is the market would go higher on more stimulus because that is what the market continues to run higher on for the most part. But here's the thing. So the Qs is up, little 0.4%. You can see down here. But it's always important to check the inside, in the market internals. What is the equal weighting tech sector doing? And that's down 0.5%. So that means that basically it goes back to the fangs. Whenever you have the Qs rallying and the equal weighted tech sector is selling off, then it goes back to the weighting that they have in the tech sector, and the weighting all goes to the fang stocks. So then you can see Apple's up 1.79%, and for the most part that's about it. Google's up slightly, and I think Facebook is up slightly as well. So here's a heat map of the market, and this is what I mean about the market internals. You've got pretty much an entire stock market flat to really selling off. I mean, you can see there's a lot more red than green across the entire market. And you've got, even in technology, there's quite a bit of selling. You've got, Google up 1%, Facebook up 5.5%, Apple and Microsoft's about flat, and Amazon's flat. So today is, for the most part, 3 stocks. So 3 stocks that have really heavy weighting going up, and the rest of the market is selling off. And that's what I'm talking about, the market internals. The market is selling off behind the scenes, and if you just look at the indices, you can't quite see that because of the weighting of 3 stocks. And on the daily for the SPY, you can see so far pretty low volume, so most likely going to be just a continuation of yesterday. Chop, basically, with a slight upward bias is what we're seeing, and that makes sense. When you have an upward trend, then that upward trend is going to remain. Even on the low volume days, that upward bias will remain. So you're going to see a slight bias higher, but it's on low volume, and that's what that can be reversed very quickly when you get heavy selling volume. If there's low volume going up, and then the heavy volume comes in on the sell side, then it can easily wipe out a lot of those positive days. So not that anything's broken today, of course. It's still in an uptrend, so I want to make that clear. But just the volume, something to look at. Let's get into a couple trade ideas and look at some things. Nothing that's necessarily actionable, but it could be tomorrow. There could be a lot of action and a lot of opportunity tomorrow. So here's your semiconductor ETF, SOXX. This thing has been, in a bullish uptrend, really since the March lows. And here's your uptrend on an hourly chart. You can see we're just kind of walking up the uptrend. It broke down right here. This was the breakdown, but it ended up being a false breakdown. And they recovered that, and then now it's been chopping back up along support. But you can see that we've come back down to the support. So this should hold. If it doesn't, and it breaks down again, then I think that's probably your clean sell signal. Again, none of this is trading advice. It's just my opinion, but If we break down again, that should be a clean sell signal because we've already had a breakdown. It was a false breakdown. It recovered. If it breaks down again, that was a bull trap. That would make this a big bull trap. So keep an eye out for that. If it's probably going to come on some sort of gap down, but we'll have to watch for it. Philip Morris here. This is interesting. All I want to really point out, I'll zoom out here. Let me go to the daily, and I'll show you. This is, this thing's been in a bear market, just downtrending. You see the price channel, it's been walking down. You had a breakout right here, and that was a false breakout, and that was followed by a big impulsive sell-off. But you can see what's happening right now, and it's nothing to necessarily take action on, but something to watch is we're just consolidating and just holding right below resistance. So here's resistance, this downtrend line right here, sitting at about 77.50. And if I go to the hourly, you can see we're just kind of basing out right below resistance. So this could be building up for a pop and a breakout. It's already broken above this and it failed. So if it does it again, it's probably the real deal that time. So it's something to watch. It hasn't broken out yet, so there's no trigger, nothing to actually trade on, but it's something to watch for if it happens. Here's a stock I'm long, KHC, and this one I pointed out a while ago. We're just consolidating within this range right here. If I zoom out, you can see on the daily that we, big support level right here at this 33.50, 33.62, basically right in that area, and we held that as resistance for quite a while, all the way back since February 2019. It since broke out of that. And this was former resistance. Now it's support. We broke out, ran up, did a back test right here, and still is holding. So looks like it's consolidating right above support. Maybe it wants to start to break higher. So far it looks good to the long side. Until something technically changes, this thing still looks like a good long. And we got some targets at the gap fill areas. So 41 or about 42. It's about 41.92 really. And then gap fill right here at 47.88. So those are two targets for profit. This is interesting. Here's Adobe. They're starting to run it up into my stop area right here. We don't have a daily close yet though. This is the hourly right here. Just kind of peeking up here, running some stops. Clearly you've got some stops that were set right above this. So it looks like they're starting to run those stops. Now, if you look at the volume so far today, it's pretty low. So like I said, if it's a marginal close just above this area, then I'm not necessarily going to stop out. But if they do come in here and run it up and we get some volume, then I'll have to stop out of this one. But for now, I think it's still okay. So we're going to go ahead and just let this sit and wait to see how the day closes. Again, that level for me where I'm really thinking about stopping is about 457.50, which is just about where we're at right now. So it's all about the daily close and volume. If they run it up on just this really low volume right before a big day tomorrow, clearly the market's set up for a big day tomorrow. Then that's something that's kind of interesting. It could just be a little stop raid right before they reverse it. This is interesting here, XLV, bearish rising wedge. And you can see that I marked the wedge out here on the daily. So you've got reactions making this top of the wedge right here. And then you've got this bottom area. So if I go to the hourly, you can see that we basically have been tagging the top of this wedge right here as we've been moving higher. And then on the bottom, it's reaction here, reaction, reaction. We have 3 data points. And we're just kind of walking up this wedge. So this is actually set up, and usually these bearish rising wedges resolve to the downside. So could come in the form of a gap down tomorrow after the jobs report. The market, to me, looks like it's set up to take the jobs report that it gets tomorrow and sell off on it. So it doesn't mean it's going to happen, but that's what it looks like. It looks like tomorrow we're going to open with a gap down. And I don't know how big, but that's what the market looks like it wants to do. Here's XLF. Again, just continues to walk up this trend line, just grinding up the trend line. It's weak. You know, this is weak price action. Yes, it's walking up the trend line. Price is moving higher over time, but it's not impulsively able to recover and really move higher. It's just, you know, barely able to move higher. So any catalyst and you probably get the breakdown and the sell-off. And we'll look at the star of the show, gold. You can see here on the weekly, it's just what looks like a blow off top to be pretty impulsive move higher on the weekly. Obviously, it could continue. One thing that I've noted, you know, we're at all-time highs in gold. This is gold bullion. One thing that you should note, RSI is creeping up near really overbought, sitting up around 81 on the weekly. And usually when we get up in those areas, you'll notice if I go back and look at times that we were that high on the weekly, that's when we got sell-off. So we were back here at 83.5 and we got a sell-off from the high to the low. That was a 7% correction. We also, let's see, we got up that area right here, and that was near the previous all-time high, and we had a 20% correction there, and obviously that started the bull market or the bear market. We were up there right here at 80.5, about where we're at right now, and we had a sell-off right here from the high to the low. That was about a 15% sell-off. And right here again, we were that high, and you can see we had a correction right here. Now that doesn't look like much, but from the high to the bottom, that was about a 7% correction. So I think it makes sense that gold is probably going to get some sort of a pullback here pretty soon. So I'm kind of watching that. I'm watching the miners and looking for what might, you know, when that actually is going to start. So that's all I got for the video, guys. Thank you. Leave me a thumbs up if you find value. Catch you on the next one.